Welcome, everyone. Welcome to our Fireside Chat event. And this Fireside Chat is brought to you by Acquchat and Atlantic Cloud Tax. I'm David Whiting, and we're doing blockchain, transforming real estate and opportunity zones tonight. And we're going to have this broadcasted. And we have some guests here on our first panel. Our first panel is going to be real estate transforming blockchain. And there's a lot of ways that blockchain has transformed real estate over the last few years. So we're going to bring some experts to talk about that. And we're going to have just what people think of, and the panel is going to talk about what they think of the current state of blockchain and real estate, and what they think of the future of blockchain and real estate. And we're going to start off, I'll introduce the panel. And our panel here, starting right next to me, is Ricardo Treveras. And next to him is Manny Alcicandro. He's an Esquire attorney. And then we have Monica Profit, a writer, and she's also CEO of Rise Housing. And then we also have Matthias Zaborski, and he's an STO strategic advisor. And then we have John Dean Markunis, and he's a consultant, real estate consultant with Power of Chain Real Estate Consultancy. So thank you for coming, and we're going to start off by, we'll pass the mic down. We'll start off with Ricardo, and they can just pass the mic down. So what is your opinion, and what are you looking at for the current state of real estate and blockchain, and what your opinions are? You can introduce yourself, talk a little about yourself first, and then talk about what you think about the current state of blockchain and real estate. Ricardo.
Well, thanks for inviting me, first of all. Well, I am an entrepreneur, so whatever that means these days. I'm an entrepreneur, so I started a few companies in the past, sold them. Then, I got involved in venture capital and formed an angel group, invested in about a handful of companies, and had some success stories, including a few venture capital firms. One of them, which happens to be Sportvest, which is a tokenized VC fund investing in sports technology. They just got picked up by the NFL to be the NFL venture arm. Another venture capital firm called Bright Sky. But anyway, so I think one of the things that I'm looking at right now in terms of the development of the blockchain industry is how people are reacting to it. Because blockchain is one of those things that's really technical, so it takes a bit of time for the masses to understand, adapt it, digest it, and start implementing innovative ways to come up with new solutions for problems. So I'm looking at how people are reacting. I'm looking at so if you take a look at last year, a lot of ICOs, a lot of SCOs, many of them which weren't successful because they realized that when you do an SEO, one of the things you got to do is that you're gonna have to become an internal regulator of that SEO, which by definition is going to be kind of an internal hedge fund. And if you have never managed a hedge fund, well, good luck with that, right? And things like that people were just not thinking about. Now that has become kind of a market awareness based on other people's failures. And so I'm just taking a look at how things are evolving. Real estate is a really interesting space. And I'm looking forward to hear from the panel and see how we can brainstorm.
Great, thanks. Thanks very much. I'm Manny Alcicandro. I'm an attorney. I have my own law practice. So just by way of background, I used to be a regulator. I worked for FINRA many years ago. I have to come clean. Actually worked for NASDAQ as well as a chief compliance officer and office of general counsel. So my perspective on things is very much from not only a legal but a regulatory perspective. So I have a good understanding in terms of what the regulators are looking for. So kind of how I look at the evolution of the market, I think it was just literally another gold rush, where people looked at it like it was a gold rush, right? Where, the market is essentially a hockey stick. Like, I'm gonna buy into this ICO. I don't really know what it is. I don't know anything about the management. So investors, I'll call them investors, because that's what they are. And that's my perspective in terms of the lens I'm looking at them. They invested in things assuming that they were gonna make money and the market was gonna go one way. And when they did that, they didn't do any type of fundamental analysis, any type of due diligence. They didn't review the experience of the management team. They didn't really understand the white paper. I mean, white papers were just kind of copy-paste jobs, honestly. And it literally was a get-rich-quick scheme. And unfortunately, the SEC really clamped down effectively. And we were talking about this earlier. I mean, if you look at the cases in terms of what the SEC did with respect to ICOs, they really are cookie-cutter classic cases. The most obvious and egregious projects. The SEC went after. So there were a lot of successful projects that went off last year, both security tokens and utility tokens. You just don't hear about them because nobody really wants to talk about them, including the SEC. Essentially the market has moved because of that and moved into the direction of STOs, which makes a lot of sense to me because effectively the way the ICOs were brought to the market were solicited. Effectively, a white paper was akin to a prospectus. There was promotional effort. So if you look at the Howey test and you look at the 4 prongs of the Howey test, it's really hard to look at ICOs that went off over the last 2 years and determine that they didn't violate the Howey test. So if you look at the market broadly in terms of, okay, wow, we're in a really different situation today than we were a couple of years ago when you really had crowdfunding offerings, right? Really nobody even knew what those were. No one even really talked about those, but people bought some type of coin or some token. They got listed on an exchange pretty quickly with probably no due diligence done by that exchange. And again, it was just a way to create liquidity. Moving into ICOs and now moving into STOs, I think it's actually great. I think STOs fundamentally are good to bring liquidity to otherwise illiquid assets. What is that? Clearly real estate, art. There's been projects that have been approached in terms of getting art, securitizing art, but effectively creating a trust of illiquid assets. But at least at that point, when you buy a token, you know what you're buying. You're buying a stake in something. It's not just an idea. It's not just something I'm going to do in the future. It's something that exists and creates inherent liquidity. So I like it. I also like blockchain, and I'm a big fan of blockchain in general, but I think that the term is kind of just kicked around too much and nobody really knows what it means, right? And I think that's a bad thing, and that's incumbent upon us to really explain what it means, because I think we have a reputational issue right now. So there's reality and perception. So the perception is that we're bad people in this space and we do bad things. And that blockchain is kind of like, Big Brother-ish, AI-ish. People really don't know what it is. And I look at blockchain in terms of creating efficiencies. So if you can create efficiencies in a legal space, I'm all for it. I hate drafting. So if I could use blockchain to automate legal processes in terms of contracts, awesome. If you could do that in terms of leases, tremendous, because you're saving time, you're saving money, and you're creating efficiencies. I worked on a project. I got my MBA, and I was working on a project where we're using blockchain in Latin America with regard to farmers, because there's questions about title and questions about where land begins and where it ends, and the farmers need to get funding, but the investment banks and bankers won't invest until they clear all the title. Well, if that was on blockchain, that'd be pretty amazing, because you do all that heavy lifting, and if that's on blockchain, it's great. You don't have to reinvent the wheel and dig up documentation. It clears up the land disputes and creates liquidity and creates transparency, and then these farmers actually get funding. So, I'm all for it. I think we're early days, though. I think there's a lot more we can do, and excited to be here. Thank you.
Hi, I'm Monica Profit. I'm a serial entrepreneur. I'm the CEO and founder of Rise Housing. It's my 5th company. I've been the CEO of 4th that I've founded, and the first in blockchain. So blockchain is something that I did not know existed until a few years ago, and I thought up a great application for blockchain in real estate 16 years ago before blockchain existed. And I was busy making paintings in my kitchen, and so when I had to choose between this financial model that I'd figured out that would allow me and my neighbors to buy the building we were in, or the painting that I really wanted to finish, I was like, I'm going with the painting. I'm sure someone with an MBA is going to figure out how to do this thing I just drew. And then it never happened. And I kept throwing the idea out to people in real estate, like, hey, there's this thing you could kind of do. People could, buy pieces, and like over time, then you could maybe not have lending and da-da. And they were, oh yeah, that sounds really complicated. And at some point, I heard that sounds complicated comment at the perfect time when someone else had mentioned, well, ride sharing was, just hitchhiking, but, getting paid for it and taxi cabs and all that was complicated until there was an app for that. And so I thought maybe there's got to be some technology that can make this real estate idea work. And that was what led me to blockchain. So when I figured out, oh, well, of course nobody did this idea back in 2002 because there was no blockchain. So of course now I see this as one of the easiest applications for blockchain. I mean, it's one of the simplest ways. I can see fractionalization, securitization, even really interesting utility coin models and membership models of engagement, creating value, much like likes on a video on YouTube, being really interesting economic models and financial models soon. But without blockchain, we're not going to be able to truly monetize that and make it secure and safe. So this is easy. This is one asset class that everybody understands. I know more about the buildings in my neighborhood than I do about Apple, except I'm allowed to buy Apple stock and I can't buy stock in my neighborhood. Like, well, that's insane. I wouldn't be able to track my investment inherently more easily if I just bought the building next door, bought some piece of anything, did 7-Eleven down the street. Why can't I do that? I would definitely keep a closer eye on my investment than I would when I just wait for the people at Apple to tell me what the hell's going on there. I have no idea. And I just kind of invest in hope. So I think we can do a lot more for consumers than just invest in hope. And what we have is a big education gap that needs to be overcome. And that's why I wrote the book, Blockchain 101. I got tired of my very, very sweet and patient cousins asking me what I did. And they love me enough to listen to me talk. And even at the end of whatever I tried to say, they were like, next, you know? They had no interest and there was no connection. And I thought, if they don't understand the opportunity, how is any other retail investor gonna understand it? So without that, you know, we don't really have the groundswell that we need. So the more we can talk and get the word out and help educate in a very basic way, I think the greater good we can do in the long run.
It's good to hear that you're talking about education, because I'm a marketing expert specialized into education. My name is Matej Zaborski. Basically, I'm Hungarian. I live half of my life in Europe and the other half in Miami. And I specialized into crypto and startup projects to help them to do the communication in the right way. Previously, I started to help small and mid-sized companies, then I shifted my focus to the multinational companies. Me and my people worked for big and multinational companies like BMW, Lufthansa, LG in more than 20 different countries. But after 10 years, I just started to, probably hate is not the best word for that, but they just didn't get the value that we were able to provide them. So then Bitcoin.com found me, and the CEO of Bitcoin.com is a good friend of mine, and he asked me to put together an educational project for them to educate their audience, because at that time nobody were able to see the change, not the change, but the difference between blockchain and Bitcoin. No, many people can't, but the point is that was the time when I learned it. That was the difference between Bitcoin and blockchain and the other stuff. And then I developed my own approach, which is the 6 proven steps to attract investors, and I wrote a book about that a year ago. And this approach is about how to raise funds through the right communication, because there are great projects out there, but many of them they just cannot deliver the message. They just don't know how to communicate with their audience. They don't know how to build trust. They don't know how to educate them, because after education, it's not a yes or no question that their audience will invest into their project or not. Of course they will. Sooner or later they will. But it's a process, and they have to guide them through on that. And most of them, they just can't. So that's why I'm here, and it doesn't matter that it's related to real estate or to a bank or any other kind of project, because the process is pretty much the same, because we are all human beings. And my process starts with the story, which is the first, because that's how we remember each other, through stories. The second is the strategy. We have to have the right strategy. Most of the blockchain projects, they have no strategy to how to go to the market in terms of communication. They just copy C, copy V other projects. The third is the summary. That's a kind of hook. We have to leverage the summary. At the very beginning, we have just like 10, 15 seconds, probably 30 on top. And if you leverage that on the right way, then we can gain, let's say, 2 to 5 minutes. And then we can go deeper and do the second layer. So then the fourth step is the traffic. We have to have the right traffic sources. It's not about quantity, but about quality. We have to create the critical mass. In my opinion, the critical mass is around 1,000 raving fans. When we have 1,000 raving fans, we can win the game. The fifth is the list building. We have to build different kind of lists. And when I'm talking about lists, I'm talking about email lists. I'm not talking about Telegram channel, Facebook follower base, or whatever the social media is, email. Because that's our own. We can control that. We cannot control a Telegram channel. They can shut it down anytime. But we can control our own email lists. And we can leverage that. And we can leverage that in the sixth step, which is the educational process. We have to give them value. We have to give them value that they can use right at that moment. And if they do that, then they will be engaged. Then they will be engaged. And after the process, then there's no yes or no question, as I told before. So that's what I do, and I'm happy to be here and brainstorm, because I see there are very valuable people.
First, I'd like to thank David Whiting for the invitation to speak here tonight at Acquchat, and it's great to see such a huge crowd out there, despite the rain here in New York City on a Thursday night. My name is John Dean Markunis. I'm a real estate industry blockchain consultant and business development advisor. I'm not a techie. My job is to articulate what blockchain is to companies, mostly startups or other companies that are looking at using blockchain in what they do in the real estate industry. Some of my clients across the sectors include a company out of Singapore. It's called CrowdVilla. They're doing blockchain with timeshare development. Another company I'm working with is asset tokenization, fractionalization out of Slovenia. And I'm working now with 3 or 4 companies doing land registry and land governance work with blockchain. And that's my focus is, within the real estate industry, my focus is land registry and land governance. It's interesting, you know, I'm going to try to answer David's original question about where we are with real estate and blockchain. I'll have to say this first. 3% of the world's, well, did you know that 3% of the world's population is aware of cryptocurrency and blockchain? Now, it was 2% last year. So having said that, at a conference last year when I was speaking, October 2017, I ended my presentation with thoughts on 3 things we need to do. The first is education. The second is education. And the third is education before we can see wholesale adoption across the board in real estate. Right now, I think, this is my viewpoint, I think there are a lot of fledgling companies out there that have started up since 2016. Many of them aren't into production yet. Some of them are. Some of them are just beginning. But I think, from my viewpoint, it'll be 12 to 18 months before we start to see any real traction in the real estate industry globally, where we'll see blockchain used in transactions, buy, sell, lease, blockchain used in land registry, blockchain used in leasing, and so on. So my forecast is 12 to 18 months for that, with 2 to 3 years out for moderate wholesale adoption of blockchain in the real estate industry.
And you're talking about in the United States wholesale adoption or globally? Globally. Okay.
With certain countries, I think, leading the way, but overall, that's correct.
Okay. Yeah, great. Yeah, so we want to talk more about the current state of blockchain and real estate. So, John, if you can maybe pass down the mic back down to Matthias, what do you, I know you talked a little bit about the general overlook and the general overview. Maybe specifically we can get back and start over again at the end here. Yeah, thank you. So basically what we want to talk about is, I know we talked about the specific aspect of what you're doing. Maybe talk a little bit more about the real estate and what you're doing in the current state of real estate, what you're looking at, if there's any opportunities, or if there's something where you're just maybe waiting on the sideline, like we're saying, things might be coming up in maybe a year or two, there might be a better situation. So what do you think about currently right now, the current conditions?
So there is a there is an immediate application of blockchain, which is liquidity. It's already been mentioned. But there's another also immediate application, which is supply chain management within the real estate space. So in the negotiation process of the construction process the construction process of properties, I've seen this happen in Texas, for example. Some things some things get lost, and then the storage of the invoices sometimes is not correct, and things don't get paid on time because the invoices are not fully correct, agreed upon the two parties, and then that delays the overall construction underneath it, and that becomes one problem after the other and after the other and after the other. One space that I'm looking at that's blockchain can be really useful, and taking a look at a few companies that are solving this problem pretty accurately, startups in particular, are companies that have the technology to bring the entire supply chain process of construction into the blockchain, and making sure that all of the transactions are secure on that ledger, on that platform, and there's no confusion. Like, if you want to see it, it's there. Just go ahead and access it, and everybody has access to it. And the more accurately that stores, and the more accurately they deal with some of the complications that blockchain has with the scalability problems of the same technology technique, the more excited I am about investing in them. That's one thing. And of course, just liquidity, the ability to buy, for the retail investor, the ability to buy assets, physical assets around them, in the way that they can see it in every day. And, if somebody moves into that house that I kind of like, and I'm going to buy the stock for that house, that kind of thing, that's actually pretty exciting in terms of the application of it. But I'm really, really excited about the application in the blockchain, in the supply chain aspect of it behind the constructions.
I think real estate is the perfect use case for tokenization. So everybody's struggling with, kind of was talking about earlier, where do we go with ICOs? What happened to that market? Well, yeah, everybody's talking about an STO, and the problem is, okay, so there's really a couple of things that you could tokenize. You create a trust, and then you put collateral in that trust. You could do it with dividends, but real estate to me is the prime example and the perfect use case to do this. So I think you're going to see a big boon in the industry and tremendous amount of growth, which we talked about earlier, creates the inherent liquidity. What you're not seeing with the STO market, and I'm working on a project right now, which is an STO for real estate, is because of the way the tokens are being offered to the market, and I'm focusing on STOs. I'm talking about, it's a security up front. I'm not getting into utility right now. There's a 12-month holding period because they're done pursuant to Regulation D and private placement most usually. And what that means is that there's a lockup provision. So the STO goes off. If it's all sold, great. And then people have to kind of sit around and wait. So what you're not seeing is what I'll call the aftermarket. So with the ICO market, ICO went off kind of like an IPO, and then it started trading on Binance. That's not happening, right? So you see a lot of enterprises like T0, Templum, Polymath is really, create a whole ecosystem effectively to create an STO using a Polymath and using a Polycoin, which is pretty cool. Templum has created a whole ecosystem to trade. So they have an alternative trading system. They have these markets primed and ready, built already. Once these STOs, the 12-month lockup is gone, and they're able to trade, you're able to trade these alternatively, not on an exchange per se, not on a Binance, but you could trade them on an ATS, an alternative trading system. So it's great. It's going to be a lot that's going to happen. But unfortunately, we're kind of in a slower period right now where ICO market has been, really effectively put to sleep by the regulatory community. and the SEO market is happening, but it takes a while to do the STOs. It's going to take a while for the educational perspective, which we talked about, which we need to continue. But I think real estate's great for the benefits that the real estate market derives. But I think it's great from a regulatory perspective and from a legal perspective in terms of doing a token offering for real estate is clean. It's probably the cleanest thing you could do, assuming there's no issues with title and all that. I love it. I think it's great. I think it could actually help a lot in New York, where the real estate market is kind of shaky. And I was just reading an article earlier about all the vacancies in New York in terms of exorbitant rents. So we could create these other vehicles effectively to create liquidity and diverse ownership to a marketplace that really doesn't have that right now in terms of it just has wealthy developers. So I love the aspect of it, and I love the fact that it's clean from a securities perspective. I think that's fantastic because I think it's the shot in the arm that we need as a community and as an industry. And I love the whole tokenization aspect, and I think it's great.
I'm also a big fan. I agree with you 100%. I'm a big fan of tokenizing real estate, clearly. I think that we've talked a bit about how we need to have so much education around blockchain, and I think about the first wave of the internet. When it was really the internet of communication. It was because suddenly you did not need to use a letter to communicate with somebody. You could do this electronic letter thing, this electronic mail thing, and then suddenly, next thing you know, you can communicate with someone, in Finland. That's insane, really, just immediately. That's just technology on steroids. Wow. And we didn't have to know TCP/IP or HTTP. Right? We didn't have to know all of that stuff to be able to engage the World Wide Web and engage our email, right? I still, to this day, know very, very little about that, but I tend to do just fine using the internet. So I think that in the end, with proper interface and not just education in this deep blockchain thing, but give me a way that it just works. Once I could use my email, I didn't need to know how it worked. I just needed to know that it worked. And so I think real estate is a very exciting asset class, and it's an exciting space because it's one that already inherently everybody's touching in some way, right? Either they very profoundly do not have a home, and we know them and we have called them homeless, or they do have a home and they rent it because they can't afford to buy, or they rent it because they choose to rent it, or they have a timeshare, or they own, or they have went off and got a lending, and there are all of these other products and things that they've done, but everybody's touched the home relationship. And so real estate is a very, very easy one. It's an intuitive one. So that's a big part of what excites me about the blockchain space, not that it's the blockchain itself. It's that we can seamlessly just fit it in there and say, this is how it works. This is what works. You don't have to know why. We just want you to use it, right? Don't you want to buy a piece of that? Great, here you can now. That's it. I don't think we need to keep educating around specific things of, utility coins were so complicated and ICOs were so complicated, it really did more to estrange people from the market and make them get a bad taste in their mouth rather than engage something that was going to work. I mean, what if there'd been a bad email system before AOL came along and we're like, oh yeah, email, that stuff's terrible. They'll just scam you out of your money, And then people had to overcome that bad bias to get an email address. I mean, AOL had it easy. So I think if we can just separate this from being crypto and blockchain to just the internet of finance, the internet of money. The first time it was you can talk to someone in Finland. Now you can transact with someone in Finland just as quickly as now you can tweet with somebody, right? What about when we have the Twitter of money? That's really what we should be talking about, is taking a metaphor and making it digestible to the average person.
Making it simple.
Yeah, make it simple.
Yes, it should be very simple because, in my opinion, real estate is a very slow-moving market. So people who are real estate developers or just do any kind of thing in terms of real estate, they are very materialistic people, and this is completely of the opposite side. That's why they have to have the education and. Not just education, but we have to give them all the steps that they have to take. Otherwise, they just will not move forward. But they have many problems, but they still make enough money to handle those problems. And it's like every human being, when we take the step, when it's very painful. So is it enough is there enough pain in their ass? If there is, then they will move. But probably they will move earlier if we give them the right information at the right time. So for example, conversations like this can help them. Because if there is a real estate mogul who is standing on the 100th floor and watching out to his empire, then probably blockchain is not the thing that he is thinking. But if we give them the right information that how to leverage this and how to make more money on this, how to simplify things, how to be more trustworthy. The example that you just gave, that's great with the farmers in where was that? Latin America. Yeah. Probably there are no problems like this here in New York or over the States, but there are other problems that we can handle.
Actually, there are. Puerto Rico, over 80% of the island cannot track the title post-hurricane, and they're not able to prove that they are eligible for aid. So title is a huge problem, even in the United States.
Wow. Okay. So then it is. On the other side, what I see that many governments just probably they just watching. That's what's happening with blockchain, and they do not do anything, because if they start to implement blockchain, then they can afraid that there won't be any more corruption, because they just cannot change the records. If there's systems like this, and if they start to implement it on a field like real estate, well, it can go to other fields very soon.
Yeah, that transparency
Yeah.
will make itself, the transparency will be there, and then people won't be able to use the system and game the system like they would
Correct.
if it wasn't transparent. Right.
Correct.
Right.
Yeah.
And John, want to?
Yeah, you know, it's funny. Matthias mentioned something called pain. And I think we all feel a little pain when we're doing a real estate deal, right? The real estate industry is deeply fragmented and highly centralized. By that, I mean the pain points that if you've ever been involved in a real estate transaction or followed somebody who did, there are many actors that are involved in a deal. You have the appraisers, you have brokers, seller broker, listing broker. You have the bank, the mortgage folks, you have the notary, you have attorneys, and they all operate in silos. So what blockchain can do is unite them on a common plane, in a common place, which is the blockchain, and have things permanently recorded. But there's one thing that's missing, I think, when we talk about the real estate industry and how to get it moving. The problem is there's legacy inertia. There are too many people who have been operating in their silos for over 100 years, and we need to change that. And part of that is education, as we talked about. But there's other two parts to that. One is people, and the second is processes. So you just can't throw out a technology solution. You have to bring in the people who are going to be able to work with it, and also to be able to change the processes that along the way. And this includes anybody involved in blockchain on a real estate deal. They will need to change the way they process their work, and eventually they'll be eliminated, perhaps, maybe brokers or title companies. But the other thing is on the land registry side, which is a really good example, especially there, you're going to have to be training people to use blockchain in the recorder's offices and the various land registry offices throughout the world. And so I think there's an inertia, there is a great deal of bureaucracy when it comes to adopting blockchain. And I think that us in the industry need to do a better job of articulating it and bringing in the human factor, the processes, and the people. It's like a three-legged stool. Once you have those three pieces in place, I think blockchain will start to jump off a little faster and ignite and take off, I think, more so than the next 2 and 3 years, maybe quicker.
Okay, great. Just thinking about that, what do you think is going going to really propel it? Is it going to be a public-private partnership? Is it going to be the government only with all the land titling? And because the government has all the records and they have all possession of it, but there are also companies like real estate companies like Zillow and other large conglomerates. If they can all put all this information together, what do you think the future will be like? I mean, we could just go this way.
Sure. Well, I think to sort of address what you're talking about, David, in looking at land titling and the recording of deeds and that sort of thing, recording of mortgages, it's really, this is one of the last sectors of real estate to take on blockchain, I think, and because of bureaucracy and because of government. Because let's face it, most land registry offices are government agencies across the world, with the exception of Brazil, which has semi-autonomous land recording offices. In the United States, these are the counties in the United States. They call them the county recorders. There are over 3,000. There's about 3,400 recorders offices, which operate in a silo. They don't all use the same software. They don't have the same processes. And in fact, getting back to the United States, there are still county recorders offices that are based on paper as opposed to even digital. Okay? Another thing about the United States. Did you know, does anybody here know what the #1 white-collar crime is in the United States? Nope.
Bank fraud around loan mortgages?
The number one white-collar crime in the United States, according to the FBI, is mortgage fraud. Think about that. Will blockchain help? Here's another interesting thing. You know, Monica brought up Puerto Rico. The island of Haiti, before they had their devastating 2012 earthquake, which killed 250,000 people, before that earthquake, their recorder and land registry offices were in shambles. There's so much corruption in a country like that documents were lost, stolen, destroyed, missing, and that was before the earthquake. The earthquake came and pretty much tore out the whole country's infrastructure in terms of its archives, not just land registry. So would blockchain would have helped there? Would a digital system would have helped there? Of course. Blockchain would have been a better solution. So the pain points are there. We're feeling them. It's just going to take a while to get for us in the industry, and the more success stories we have and use cases and pilot programs we have, I think we'll be able to push it a little bit further. Yeah.
And as we pass it down, what about those pain points? What do you think? Is it going to be the government or the private industry is going to ameliorate those pain points?
Both.
I think both.
Yeah, both. I think that it's certainly with government agencies, they're lagging behind, but they need to sort of step up to the plate and realize that what blockchain can do, and they're doing that in the United States and some other countries as well. I think there's going to be a lot of public-private partnerships pushing things through with blockchain, without a doubt, in different sectors, including real estate.
Matthias, do you think public and private is going to merge in the future?
Yeah, well, at some point, probably. It should.
Because I know we're looking, right now, the private sector is doing their own thing, I know the government is trying to reach out to the private sector, and I know one day it's going to happen, the merger is going to happen, but we will see how this is going to accelerate, and what do you think the future is going to be like?
Yeah, if you do a good lobby job, then probably it will be faster.
Exactly, right?
But
it never changes, right?
yeah, but
blockchain can't change that.
yeah, but at this point, I think it should come from the public sector, from the public and private sector. Otherwise, there won't be any change. So because the pain point is here. So so as I just heard that, let's say 10 different people involved into a transaction, or more, 15,
Yes.
around 15. It's crazy high. These people needs money for this, right? So, and if I buy or if I sell, it goes from my pocket.
That's right.
And that's the main problem with this. transparency and other stuff as well. Probably it's slow as well. There are many other pain points. But basically, it takes so much human effort. And in my opinion, that's what will change a lot in the next 5 to 10 years. Many things like this will be algorithms. And probably, I don't know that what will be the point which will change this. But we have to do our best, and we have to do our job like you do, and then at some point it will merge. We can't see that where will be the merge right now, because there are institutions, especially government institutions, which seems untouchable, and that's the main problem. That will change sooner or later, and that will come from the private sector. In my opinion.
You've talked a lot about pain, and it's funny because I think about how pain points get identified once we have a solution to them. But, I have a pain point that I can't fly home right now. It's a real pain point. I've been feeling it my whole life. It's not something that we're going to be worried about until someone comes up with a solution that says, you can fly home now, and I'll be like, I need one of those. I have a pain point, right? The pain point doesn't really get identified until the solution starts to emerge. And what we have is this very innovative technology that gives us all of these possible solutions. And we're sitting here talking around possible solutions. Oh, it's the transparent, I have a new pain point of transparency. Really? Was that a pain point? Did you have that all along? Like, when did you come up with that? When I told you that transparency was something that could be solved? Oh, that could be more revealed to you? Or, did you have a pain point with mortgages? It seemed like everybody was perfectly happy to consume mortgages. Until now, when maybe they can go straight to the crowd and they can fundraise something and get a better deal and not pay a bunch of front-loaded interest. Interesting pain point that was never a pain point. It was actually, I was eager to get my first mortgage. I was eager to get my second mortgage. I was just happy to be investing and getting a part of the existing ecosystem. Did I have a pain point that I couldn't, get an app on my phone to call me a taxi that wasn't a taxi? That didn't, that was even cheaper maybe? I didn't have that pain point until somebody told me we can make it better. So in the end, I think we don't have pain points that we're solving. We have pleasurable experiences that we're creating. We have solutions that we're simply bringing. And if we can say, here's what you can have now, people will go, oh my God, I'm in so much pain until I get that, right? That's consumerism. That's what we're playing into. So this isn't about pain. This is about properly solving and presenting and inviting the customer base into a new reality. And so we have this innovative technology that allows for multiple different points where we can touch the human experience, the transactional experience, the lending experience, the home ownership experience, the occupancy experience. All of those experiences are going to be transformed. Even the ability to prove that it's your home with a title experience. No one said it was a pain point until we said we can solve it. So now we just have the obligation to identify those things very clearly, bring them to market, and bring them to market with as much pleasure to the customer as possible. Stop talking about pain and start talking about solutions and the pleasure of it. Then you can just simply attract it. This isn't talking about someone's problem. It's about giving them a carrot and they'll remember the stick. But you can give them a carrot and they will just run towards you. You might as well. That's, I think, just basic communications and marketing.
I'm old enough to remember the days before ATMs existed. And it's my mom's birthday today. She's 81. And my mom was a bank teller. And, I remember when ATMs came out, people didn't trust them. Yeah. People still went to tellers. And there was tremendous resistance because an ATM is a disintermediator at its best, right? You could do a lot with an ATM. It works 24/7. But it still creates jobs, but not as a teller, but servicing the ATM and all that, right? So if you look at what we're talking about a lot of jobs at the county, people pushing paper. So whenever you have a new technology that disintermediates, guess what? All the people that are intermediators, what do banks do? Banks are intermediators. If you had straight through processing, if you were able to get direct funding outside of a bank, what's a bank going to do for employment? Who's going to work at the bank? How's the bank going to generate revenue? So I'm not anti-bank, but I'm saying that whenever you introduce a new technology, there's resistance. And it's not necessarily resistance around the technology, it's resistance around, oh my God, this is a new way of doing things. I don't really trust it. So with that being said, where I think the kind of technology, the push, the impetus, the thrust is going to come from actually not only from private industry, but also from states. So if you see a couple of states, like Delaware, for example, I mean, Delaware makes money from you setting up a corporation in Delaware. Why is that? Because the Delaware Chancery Court usually supports a corporation. So you want a favorable jurisdiction, that's why people go to Delaware. That's the truth, okay? You look at those decisions, 9 times out of 10, they go in favor of the corporation. That's why every corporation registers in Delaware. Delaware is moving forward with regard of utilization of blockchain for their records. Look at Wyoming, very progressive state. Wyoming's done a tremendous amount. You know, Caitlin Long, she's wonderful. They're doing a lot with regard to blockchain and crypto. So I don't see this because real estate, it's controlled at the county level. I don't really see the pressure from my perspective coming from the top down, meaning from the federal government. I think the federal government's got enough to deal with. I see it bottom up. I see it from the county level, from the state level. So you're going to see a lot of movement from states, which you've seen already, and other states will follow because people will flock there for business and do business there. Secondly, I think you're going to have private-public cooperatives, right? So I know IBM's doing a lot in the space, and there's a whole lot of good technology, but again, the resistance is going to be from putting people out of work. I mean, I've done some research and spent a lot of time talking to major economists, talking about if there was a big boom of technology in the United States with regard to automation, it could lead to displacing like 30% of people, pretty much overnight. I mean, think about a bank, think about how we manufacture, think about an automotive plant, think about things we do in this country that could be automated with technology and robotics. I worked on a project I was a management consultant for a period of time, and I worked on a project for an investment bank. And you know those old green bar runs that are like, hundreds of pages long, you have everybody's account information on those? You'd have to go through those and find people's information, their name, their address, and their holdings. We were able to use robotics to do this in about 15 seconds. It essentially went through thousands of pages of reports, put the information in emails, specific information that was different in about 150 emails sent to 1,000 people on that email. That was done in 15 seconds. Manually, that took 100 hours to do. But I mean, think about what that would do to our economy. So there's a tremendous resistance. So talking about blockchain and implementation of blockchain, I personally feel, and I talk to people about it all the time, there's a lot of resistance. There's always resistance with new technology. But there's also, what are we going to do? We don't have people who are going to be able to work. There are people who are county clerks. I don't know how to train those people in terms of using technology, and they'll be displaced. So we have to overcome that resistance. So I think, we're like 3 to 5 years out in terms of really seeing kind of the real impetus. But again, it's going to come from the bottom up. I think globally, there's probably better opportunities to do it because you don't have the federal state tension in a lot of countries, and the countries are smaller. So you look at Bermuda. Bermuda's done a lot of really cool stuff with regard to crypto. I know we're talking about they had a conference today. The premier from Bermuda was here, and you could set up shop in Bermuda pretty seamlessly. And outside of being a reinsurance enclave now, they're a major crypto enclave and blockchain. So a small country like that could get a lot done because they don't have the tensions that we have between federal, state, and local governments. But I think using them as an example, there's a whole lot more we could do.
Yeah, so I agree. So I think it's going to come bottom up. Some government entities have incentives for cost efficiency purposes to implement blockchain right away. But I think the true innovation of blockchain, because before the government can implement it, somebody has to create it. So I think a lot of the innovation is going to come obviously from the private sector and from entrepreneurs, wanting to get up in the morning and solve a problem for somebody and then communicate it properly to the masses, and let people know that they can do something that they couldn't do before in a really simple way. And it's a matter of finding the early adapter. I mean, there are processes to go and prove the product market fit for anything you can think of, right? Find the early adapters and roll it out from there, right? I think that, so for example, speak with any, if you speak with a lot of, accredited investors, one of the things that is usually a point of conversation is taxes, which is, okay, well, how much are you paying taxes this year? Or how are you taking any net operating losses? I have spoken with a handful of them, and it turns out that one of the things that folks are not excited to pay taxes, especially when you're paying millions of dollars in taxes, is the lack of transparency from the government. It's like you don't really know what the government is doing with the money. I mean, there are many different sources to find out at a really, really high level how much money is being put into innovation for artificial intelligence, how much is being put into funding for universities to come up with new technologies like blockchain and so forth. But when you write a check to the Treasury of the United States, you don't really know where that's going. And blockchain can provide an opportunity for transparency there and make people more comfortable and to pay their taxes. And I think that's a great application for it. And my vision is that if blockchain can this is not going to take 3 years. It's going to take really long time. But the vision, I would love to see the United States being a really, really transparent platform where everything can be exposed. And it's a really pleasurable experience to pay taxes. Yeah.
That would be great.
Yeah.
That's going to be down the line. But I think Manny made a good point. I think it's going to be from the bottom up, and it's going to come up. And I think the grassroots and people are going to start looking and demanding that they have more transparency. And a lot of these pain points are also represent a lot of jobs right now, like you're saying. A lot of these, if we take and disrupt and bring technology in, it's going to disrupt a lot of jobs. So there's going to be a balance in how that's going to come across and how that's going to come about. It is going to take a few years, but I think there is going to be changes in the next 3 to 5 years. And I just want to wrap up this panel by everyone just saying a short little thank you and a little what you're doing in the future and what you think about what we're talking about here, and just wrap this panel up. Start with you, Ricardo.
Yeah, thank you for bringing me on. I'm always looking for opportunities, especially when people are excited to innovate and disrupt. And, that's one of the things that excites me. It's like, okay, well, how can we make something better? And then educate the audience on a pain point that they didn't even know existed 5 minutes ago. So these are the things that motivate me, and blockchain is definitely the right tool for that. So I'm always looking for that, and I'm looking forward to learning more in the process of helping these early projects develop and conquer masses. So that's what I'm saying about it, and thank you for bringing me on, David.
Thank you.
Yeah, thank you so much. I really enjoyed meeting you all. I look forward to speaking with you, later on. What I'm interested in and what I'm focused on is, I always see and meet people who have great ideas, but it's come to the point, to be candid with you, where I feel like a lot of entrepreneurs are coming up with solutions to problems that you don't really know you have, which you kind of alluded to, as opposed to, you look at someone like Dropbox and you look at what Drew did. Clearly came up with a solution to a problem that existed. So I love entrepreneurship. I'm passionate about it. I love working with people who have new ideas. But at the end of the day, I think it takes a lot of prudence and also takes a lot of patience. And I think what we're all agreeing upon is the fact that we'd like to see things happen quicker, but just because of the way things have been set up, and property law is one of the oldest laws in the world. It's like based on a feudal system. It's so antiquated. So to look for a big bang in that industry, it's just not going to happen. So I think it'll be a slow burn, but I'm excited about it. I'm excited about blockchain. I'm bullish about blockchain. I think blockchain's great. I like the fact that we're able to now, thank you for talking about differentiating between Bitcoin and blockchain, which people still confuse. But I think, Bitcoin is what it is. But I think the blockchain, in terms of opportunities for jobs in the future, clearly in real estate is tremendous. But I think broader than that, just creating more efficiencies and transparency, I think is awesome.
Yeah, I agree, 100%. Absolutely. I guess my focus is just bringing a solution of tokenization to the marketplace as seamlessly and as easily as possible. And that's not just in the US, it's on a global scale. I think that there are massive opportunities outside of the US. We have so much infrastructure that currently exists. We may end up being, in regards to even blockchain and tokenization and all kinds of fractional ownership models, whether that's in real estate or not, we could actually lag behind the global economy in the sense that, you know, when you look at, say, the US, we took on telecommunications and we first had landlines and then we eventually adopted cell phones and then smartphones. And in Africa, they went from no phone to smartphone, right? Or no phone to cell phone at least. And so I can see there being massive adoption because there's a greater need in other emerging markets. And that's very exciting to me. I think that this might be an opportunity to see emerging markets catch up and maybe even surpass some more established infrastructure. And that's great. I'm always kind of rooting for the little guy and the retail investor or the person who really was not included in our global or domestic economy. So I'm excited to see democratization and true engagement on a financial level and economic level.
Thank you. First of all, it was great to be in this conversation because I learned a lot. So this was educational to me as well. Currently, I'm focused on a lot on the human factor. You just mentioned human factor, and I just launched a new service 2 months ago, which is the human factor, because when we are talking about projects, because we not talked a lot about projects, but at the end of the day, when we want to create new things, we need money for that, right? So sooner or later, we have to raise money for that. And what I realized last year, that many projects, they just don't focus on the human side. They have all the details, all the financial details, all the technical details. They have every kind of details, except the human part. Probably you can find some photos and short bios and probably a link to their LinkedIn profile, but pretty much that's all. But basically, when we are talking from an investor perspective, technically they are investing into companies, into projects, startups, ICOs, STOs, whatever it is. But basically, they are investing into people. And we cannot see the people behind the lines. So currently, from my perspective, the biggest challenge is to help these companies to show their real face. Who are these people? And then it's a completely different conversation, because probably you spend like a few months, at least a few weeks, to sit at the same table with your potential investor. And then after 5 minutes, you just realize that there's no chemistry between us. And then you just, okay, then that time goes to the rubbish. And that's it. You can cut this. And of course, now we are talking about technology, which will recover so much human effort. And it will be better because that probably will not make any mistake. But on the other side, I believe that we humans should control the game. And is it real estate or is it any financial stuff? So that's my focus right now. Thank you.
Thanks again, David Whiting, for inviting me out to this illustrious panel. I learned a lot too. One thing, what I like about what we're talking about is, there's so much hype that is generated with people out there, and it's somewhat reckless. I think it gives you the idea that there's a blockchain for every pain point or problem in the universe. There isn't. In fact, there probably what I tell my clients is, have to look at other technologies besides blockchain, which may work better and more cheaply than in jumping into blockchain, which is really important to consider. So I don't think blockchain is going to be a revolution, that it's going to disintermediate a lot of people. I like to say, take the R out of revolution. You have an evolution. I think this is what it is. It's an evolution of blockchain education and eventual adoption. I'd like to conclude by mentioning a couple organizations I belong to, maybe a couple pitches. The first is the Government Blockchain Association based in DC, Washington, DC. I'm a member of that group. And again, getting back to David's point about government, this is an organization that is dedicated 100% in getting global governments engaged in all sectors of blockchain, whether it be healthcare, real estate, cybersecurity, identity, cannabis, all aspects. We have over 90 chapters throughout the world, and we're here with the chair of the New York City chapter of the Government Blockchain Association, David Whiting. And the other organization, in my involvement with GBA is I'm the chair of a working group called the Land Titling Working Group, which gets back to my focus with land registries and land governance. The other group I belong to is a group called FIBRE. It's an international real estate organization, a nonprofit based in the Netherlands. It's the Foundation for International Blockchain Real Estate Expertise. I am the co-chair of the New York City chapter, and I'm here tonight with Anthony Elias, who is my co-chair of the New York City chapter as well. And if you're interested in real estate and blockchain, FIBRE is probably the best source to go to right now. Thank you again.
Okay. Thank you very much.